Okay, thanks for joining. It's Tuesday. I'm on the Trading 212 app. My battery's low. It can only mean one thing, Trading 21 Tuesday. And in today's video, you've guessed it, we're going to be talking a little bit about pies as we do in every single video, because all of my investments within Trading 212 are situated within the individual pies that we talked about and created about a month ago. And so it being nearly a month since I created these pies, I'm going to talk to you a bit about how I feel about them. Did I feel like I've made the right decision, or do I feel like I want to change some pies, add some new pies, etc, etc? So if you want to know all of that plus more, please like, comment, subscribe, help the channel get to 8k subscribers. Follow on Instagram and Twitter at InfinInvestors. And if you are new to investing and you're wondering what application are you using, I'm using the Trading 212 app. My link will be in the description and a pinned comment. Click on the link, sign up, deposit £1, and you will get a free share of up to £100. I got a Under Armour share today for about $10, or I think it came about $8 or $9, and I sold it at $9.99. So it does happen, it does work, and it's a really beneficial tool to get you on your journey. So what are you waiting for? Get on it, get on it, get on it. The link is down below. But let's first start off with a quick portfolio summary and overview. So I done another round of investing today, as you will see. So the values of some of the pies, or all of the pies, have gone up. So you will see that within the 30 fund, and the purpose of this pie is to put £300 on a monthly basis into these holdings: Amazon, Tesla, Taiwan Semiconductor, Fastly, Nvidia, Adobe, Square, Trade Desk, and Etsy. So I've added another round. I showed you last week the different ways you can fund your pie. So obviously last week we did an intermediary round because I had loads of free shares, and I did self rebalancing. So I showed you the rebalancing, and I showed you the custom way. In this way, I just did it my normal method, which is just to fund by targets and just to let it continue in the normal way. Like I've said previously, I don't really want to try and get too custom with this portfolio and start picking individual stocks and saying, look, this is my next round of investing, but let me put all of my money into Taiwan Semiconductor because Taiwan Semiconductor is gone down 20% this week or this month or whatever it might be. I want to keep a complete passive view on this and just say, these are the stocks I believe in, these are the allocations that I have for these stocks, and let me just continuously invest. And should I want to change my allocation, as I did last week for a justified reason where I increased Apple, then I can do so. And if obviously something's gone so overweight that I need to kind of bring it back down in check, then obviously I might rebalance. But ideally I will try and keep the same cadence going forward, so I can overall try and hit the goals that's been set with the pies feature. So if you are new to this and you don't know how to get the pies, I do get asked this question quite often, and forgive me, I may not have articulated that in the previous video. So you need to go to the Trading 212 community, head over to the community. There will be a community post about auto invest. The feature's called auto invest. I just call it pies because I like food, so you know how that goes. And when you click on auto invest, rather, you'll be able to enter your email that you've used to sign up to Trading 212, and then within a couple of days, Bob's your uncle, mate. It's there and it's ready for you to just start investing and start just munching on those pies. But yeah, 30 fund at the moment is 5.39%. Obviously it was a little bit higher, but obviously it's kind of averaged up, so to speak, as I've done a round of investing today. But the good news is that all of the positions are in green apart from Etsy. Not too concerned about that. I think Etsy will definitely make its way into the green. Particularly, obviously, I think Etsy is one of those stocks that's done well during this Divock 91 situation, and I think it will continue to rise. Their last earnings was actually pretty decent as well. So yeah, that's going well, and I'm happy with this pie. Sometimes I do think, should you add another stock to the pie? Should you do this? Should you do that? And I think if there is something else, I have to evaluate whether adding it to a pie and changing the allocation and the dynamic of a pie is something I really want to do, or whether or not I should just have it as a separate investment, or potentially create a completely separate pie with a completely separate goal and outlook. Now we go to the DPMO pie. Obviously I've averaged that up a little bit, so the price, this percentage, has gone down to 9.74, as you can see on your screen at the moment, but still doing okay. However, as we kind of illustrated last week, the majority, actually not the majority, that's the wrong word. This is a complete gross underestimating it. The full performance is coming from Neo. Neo is basically the reason why this stock is performing. Cloudflare, Virgin Galactic, and Lemonade is bringing the stock down. I just done an Instagram post on Virgin Galactic, so if you haven't checked that out, please go and check that out. Please like it, please comment. Hope you obviously like the information there. The reason why the DPMO pie exists, which is what I call the development of premium monetary opportunities, not don't piss me off, although, hopefully it doesn't do that either. But the reason why is that this is a higher risk pie. This is a higher risk, but a long-term pie strategy where I want more speculative stocks that are going to be somewhat unproven, but they do have a unique moat. And that unique moat, I believe, in the next 10 years, 15 years, will be, really significant in terms of the growth that I should expect back from obviously investing into these businesses. So, some of these businesses, I do have individual separate investments in them because I do believe in them. So Cloudflare, I've got, a holding within my ISA and free trade for Cloudflare, as you guys have seen. Virgin Galactic, I probably will have an individual position on Virgin Galactic, put some money in there and just completely leave it once it hits the price target that I kind of want it to get. And Lemonade, I definitely will be buying and investing into Lemonade. I do have a bit of a position in Lemonade in 212, but again, it's small, separate to the pies. However, I think Lemonade is a position that I definitely would like to get a meaningful position and just leave it and just come back in 10 years. These are the types of stocks that I'm hoping has a similar performance to your Amazons, to your AMDs, to your Squares, to your Teslas, to those stocks that if you look at the last 5-year performance, you're seeing 6, 7, 800, 900%, or in the case of AMD like 4,000%, in the case of some other stocks 2,000-3,000%. That's the type of return I'm hoping to get. So I'm more than happy to continue dollar cost averaging into this, and my expectation or what the pie basically teaches me is that I'll be looking at roughly a 50% annual return based off obviously the previous 5-year historical market performance, which is fine for this. And obviously if I want to pick any of these individual stocks and put a bigger position in, then I'm more than happy to do so. I think there's it's a very interesting idea, having investing into a stock within a fund that you've self-created and then also investing into the stock directly as an individual stock investment. I don't really know of any scholars or any investment gurus that have any real stance or position on that. Me personally, I think it's completely fine. I'm putting what I would consider a relatively small amount into this on a monthly basis. The DPMO is getting £100 a month. The Kiddies Fund's getting £100 a month. The Certi Fund's getting £300 a month. Just purely based off the time frame with the Certi Fund is much shorter than the DPMO and Kiddies, which the Kiddies is an 18-year goal. The DPMO is a 10-year goal, and the Certi Fund is only a 3-year goal, which is the reason why I'm putting a little bit more in order to try and get that return. But because obviously it's such a long goal, I'm just happy to put this £100 in, and effectively I'm kind of not worried about it. I don't feel like I'm losing that money, and I feel like in whatever way I will be gaining at some stage in the long term when you think about it that way. But obviously if I do want to have a meaningful position in some of these businesses, then I don't see why I can't put a position, especially within my ISA, so that if I do get £20,000 as a profit or return, or 30,000, or hopefully more, then it's all tax free and I ain't got to pay Uncle Sam a dime for that. But yeah, that's the DPMO, and that's the purpose of that at the moment. And then obviously the Kiddies Fund, which probably my favorite pie at the moment. And so these are long-term businesses that I believe in. All of them happen to be in the green, much safer businesses, but businesses that I just think will still be here in 18 years, and just going to be continuously doing innovative things and changing the world that we live in. And so there is dividends that will be coming into this pie as well from some of these stocks, which will be good, and obviously those dividends will continuously be reinvested, and so that compounding effect I'm hoping will have an exponential growth. And 18 years I can give my kids some checks, and they can do what the heck they want with it, within reason. Otherwise I might have to just rob them and just take it back from them, because that's the type of dad I'll be, straight up like that. Overall I'm down 1.26% 6%. As I say, it's not to do with the pies. You can see that all of the pies are in the green. Overall, they're all in profit. It's quite simply the fact that, you know, I mentioned this previously, that I went heavy on lemonade, relatively speaking, to this portfolio. Considering it's a £2,000 portfolio, 25% of it is basically in one stock. So relatively speaking to this portfolio, I went heavy on lemonade, just because I got really excited one time and I felt like taking a punt. As I've mentioned, now for me, lemonade is definitely not a punt. It's a business that has, for me, one of the most unique opportunities to disrupt in the next decade, an existing industry. And I'm really excited to see Lemonade's journey, and hopefully it does that. I've done a little write-up on that on the gram as well, so go and check that out if you want to see more. And I think I will probably do some individual videos on these, just so you guys can get a bit of a deeper understanding and really hear it from me about how I feel on some of these businesses, because I know these portfolio updates are just meant to kind of give you a little bit of a snapshot rather than, you know, get into detail. But yeah, that is really what's pulling this down. But, you know, for me personally, it's not that big a deal, and I will continue to just average down, average into the portfolio and just keep on topping up on a monthly basis, or sometimes a little bit more frequent depending on the amount of free shares I get. So get signing up, and obviously you can start, you know, using your code and getting people to sign up to free shares on your accounts as well. So yeah, that's a quick portfolio update for today. You know, everything's going well, running as it should be. I'm really loving the Trading 212 app. I'm often asked the question, will I be moving my free trade ISA to Trading 212? Obviously the ISA here on Trading 212 is free. There's more stock choice. Obviously some of the features and functionality is better. I can put the pies into the ISA and obviously have all of those gains tax free. Right now the gains, you know, won't be hitting my capital gains personal allowance limit, but you know, one day in the future, especially if you're talking about these 10 years and these 18-year stocks, it potentially will do. So, you know, those are definite candidates for the ISA, and considering that I'm only putting, you know, £500 a month into this, then, you know, definitely that's something that can be done. I am definitely considering it, obviously, because I've input money into my ISA since the 6th of April. I do have to wait until the next financial year, so that's going to be something that I have to evaluate in 2021. And because Freetrade doesn't do clean, simple transfer outs, if I was going to do it, I would have to liquidate all of my positions and then transfer the money out, and then transfer the money in, and then rebuy all of those positions. And, you know, I reckon I'll probably be out of the market for about 2 or 3 days, you know, during the whole process of, you know, the closing, the withdrawals, the transferring, the rebuying, etc., etc. Hopefully by then there'll be some form of smoother transfer process that I could be a part of or take advantage of. So, you know, we'll see what the state of play is then. But it's definitely something that I have considered. But it might not even be Trading 212. Maybe another app will come into the frame with another ISA product that, you know, I feel is better. I think you've always got to keep your options open. Anyway, that might be something I do in the future. As for now, because I'm nowhere near my tax liability, it doesn't really bother me at this current stage, and I'll just keep on investing as per. But yeah, hopefully you found this useful. It is a short video, but you know, if there's any specific questions you've got that you want to, you know, get the answers for, just leave it in the comments, and you know, I'll try to get back to you as quickly as I possibly can. And yeah, hopefully you guys look forward to the next video. So I will catch you next time with another investment video. Please like, please comment, please subscribe. And yeah, take care, enjoy your evening, and I'll speak to you soon. Take care, peace.